What's up, everybody? Back with some Capitalism Lab here. It's been a little bit, but I like where we're at. I think we left off working on our real estate empire in a few upcoming cities. We have about 17 million cash. We are working on really just getting some supporting cash flows to support this bank venture that we are in right now until this continues to try to break even. That's probably what we're going to continue to do this episode, at least get this green. I know we finished green last episode, and I guess it's just still fluctuating. But in other news, I mean, if you guys have been watching the markets, it's been a pretty interesting last few weeks. Tech has corrected quite a bit. And if you don't follow the real markets, I mean, I would encourage you to do so. Pick up a subscription to the Wall Street Journal or some other big news sources. I think it's really, really fun to watch, and you can see how a lot of these factors that we might talk about within the game are applied in real life. So it's really interesting to watch. I would keep that in mind. People like Kathy Wood and Bill Ackman are really interesting investors to watch, and I would check out some of their content. It's fun to pick their brains, read their research, things of that nature. But here we go. So, anyways, a few things that I want to do here. Where do we want to start? I'm thinking we just start with a town that we haven't really touched. We have not been to Pettibone. Doesn't seem like there's a lot here. I mean, all this land is filled up. I want to see it. This looks available right there. That'd be a prime piece of real estate. Okay, we don't have enough cash though for that. Let's get the simulation running. We might have to do another raise just because this is starting to, for some reason, actually go lower. Our bank net profit, I mean, I remember when we had 3 branches and this was around, say, 20 to 30 million, so it's nice to see this reduced. Okay, we're back green. I'm watching this because if this starts to get up too high again, then we're in trouble. And that seems to be what's happening. For whatever reason, I didn't even change anything. And I knew I wasn't really going to touch the bank for a while. Thought we were going to be all right. Maybe it just fluctuates, but revenue and profits are flat. So yeah. Okay, now we seem to be a lot better. Okay, cool. Whatever, we'll let that go. I mean, I think it'll be kind of volatile for now. But we still need cash, especially for these other cities. We're going to focus on Pettibone this episode, probably. Where were we looking? There was a golf course nearby. Yeah, right in here. So, what is this? Are these just land plots already owned? Yeah, they are. Oh yeah, LG kind of took over this little suburban area. So, do we have enough? We do out here. It's kind of close to these factories. University right here. Anna, yeah. So I don't see any really major apartment buildings by this university. I think we could capture some nice market share right in there. Full shopping convenience, almost full community facilities. Pretty nice. We should see good things come from that. Now we're low on cash, actually. And because our cash flow is basically zero, it's not really that easy for us just to generate free cash flow. So we're probably going to have to go to the market. Our investors, I think they've liked what we've done. Now we're just spreading our real estate empire. And I mean, can I see the rankings? Where are we now? 9th. Better, I think. I think we were 13th or something before. Now, I mean, we have about 2.5% of the market share, which is fine. No debt, which is really nice. Haven't really needed it. I'm weary on raising more equity, just because of our stake is already 20 some percent. Our operating profit has recovered nicely after that banking venture, so I think our investors have liked that. But anyways, where are we? Yeah, I own about 23%. Next on the list is IKEA. They own around 18. So if they start making moves and buying up some of these private investors, then we're in trouble. So at some period of time, just I think a defensive move, we're gonna have to buy some stock back for ourselves. Oh yeah, we do a lot in. Oh yeah, I forgot we even had that stake in Walgreens. That's played out nicely. We have around 66 mil, and I'm gonna kind of use it for defense if it gets to that point. But we can just keep letting it ride, especially because Walgreens I think pays a. Never mind, that dividend's kind of trash. Whatever. Wow, we're trading a PE of 111. That's kind of funny. Investors kind of see it as a growth stock rather than a value play. Fair enough. Anyways, okay, back to raising money. Oh yeah, so okay, going off on a side note, I might look to experiment with a subsidiary just to organize our ventures in order. So our main parent company, Super Shots, is going to be the real estate mogul. And then depending on what we branch out into, we could set up a subsidiary for, I think, tax purposes, as well as just to keep our organizational structure just a little more clean. But issuing bonds might be the play. Look at this. Okay. Ooh. Oh, this is total. Okay. We're losing about 4 mil a month on the bank, which is totally reasonable. That's not even that bad. It's really not. Sony acquires Toshiba. That's kind of funny. They took control. Yeah, that's what we're scared of happening to us, because then this series comes to an abrupt end. But okay, yeah, that's right. I was going to raise some cash. Let's actually do this. I don't want to raise equity. I want to raise or issue bonds. Issue new shares. Yeah. No. How much can we raise? 100 mil? Oh, this interest expense is not fun, though. Actually, it's not even that bad. Say, ooh. You know, maybe we don't even have to raise anything. Now they're making 15. We could probably just place an apartment somewhere here. So we just placed this one. I think we only have one in the city so far. How's it looking over on this East Coast? For some reason, there's apartments all the way out here, which is surprising. This isn't actually polluted with factories yet. We have a department store out here. You know, this might be a nice little niche area. I wouldn't put anything too expensive, but maybe. So that's about a $16 million investment right here in this corner, right next to Starbucks, right next to the electronics store. Factories are a little close. But I mean, if I go across kind of a few blocks away from them, it just becomes way too expensive. So let's say we do that. And that leaves us with 21 mil. Operating profit continues to climb to about 19 mil. Very nice, very nice. So maybe one more for the city. Still got cash. Good luck competing with all these people, but right by this tennis court here. Why is there got to be a factory right there, though? Warren Buffett. That's too bad. Well, our next best area... Ooh, right by the stadium. Bakery Stadium. Maybe right in this corner or this corner. So I don't know if this counts as kind of green area. But, I mean, look at all this stuff going on around here. And the factories are fairly far away. So we can put a... Let's put a nice... We can put a nice apartment here. 14 million land costs. But maxed out again, shopping convenience. Green and sports. I wish I could max that out. I think we would get a nice premium for that. I guess this is too far away, the stadium, if that counts as sports. I still swear I could place community buildings. Kind of surprised I can't. But that'll surpass 20 million in operating profit, which is a nice milestone. In our 27 years of existence. So we're generating around 20 mil in revenue. What are we valued at right now? Actually, what does our balance sheet look like? Oh, just our... Jeez. Our cash balance has become kind of miserable. What are we? We're valued at around 800 million on 22 million in revenue. Our PE has come down. Our stock's kind of corrected a bit. As expected, down around 16% on the year. Price to book. It only has a price to book of 1.3, which is actually pretty low for growth stocks, if you consider us a growth stock, which I think I would. There's a lot to do. But look at this. This has gone up exponentially. 26 mil now in operating profit. Apparently that's just not being priced in. Our bank's losing around... Okay, this used to be 4 mil. Now it's around 3. That's better. I like that. So we're getting better. Again, it probably won't be for a few episodes before we touch that, but it's good to see their efforts are actually paying off of kind of a restructuring that we put in. Let's go back to the city of Craig. See, like, what? This is still being reduced. Cool. Oh god, look at these margins. Yeah, that's too bad. We kind of want to reset. So we're generating a lot of cash. I'll probably put some into the market again. We don't have any investments right now. I'm going to take a look to see. Sony is about a $1 billion company. Sorry, $11 billion company. PE of 10. They pay a pretty good deal. I mean, 1.4% is better than nothing. How are these other companies? Any major corrections? Not really. Oh, the Bank of Santander. That's looking kind of nice. Oh goodness, they're trading. I don't think they're making a lot of money though, in all honesty. Another IPO. You know, I think Nike's our best bet. I mean, sorry, not Nike, Sony. They just went public. I don't know what type of firm they are. Let's take a look. What do they do? No debt. Pretty good operating margins. Now, what do they do? Computer, electronics, home appliances. Okay, cool. That's fine. I think IPOs usually do pretty well. In real life right away and in this game. It just won't be a long-term investment. Profits are steady. Diversified. The CEO is experienced in electronics. We like it. We like it. So let's go ahead and purchase some of Sony. Oh. And the public owns 0%. Well, if I wanted to purchase it, it would have to be from the CEO himself, who owns 100% of the stock. I don't know how this company is public then. How much can I offer this for? Doesn't want to sell this. All right, forget Sony. We are not going into Sony. Jeez. Everything's just... You know what? Maybe we gamble. We're generating so much cash that honestly this doesn't really impact us. And no public shareholders. Ugh. Can I buy some from Jose? He doesn't want to sell his stock. All right. Our options are limited. It's really too bad. Tata. Come on, the public doesn't know anything. These are all just being scooped up by other corporations. Even Super Shots doesn't have any public shareholders, so I guess it's valid. 44 mil in cash. I mean, let's just keep putting it into what we're good at then. Real estate, here we come. So Los Lamitos, we have not been to the city yet either. I like some of this coast land. But some of the factories are kind of scattered along. I don't really like that. This area hasn't... Oh, this kind of seems like it hasn't really been explored yet. You know what? We could start kind of our own little operation out here and just buy up all of this. I mean, maybe not. Well, let's just start with an apartment then. But we could have the cash to do this. Could start our own kind of little suburban operation, especially with 2 tennis courts. The R&D, yeah, it's there, but a police station, I mean, some mansions, like this could be a really nice Instagram.com, okay. Yeah, this could be another drugstore just went up. Okay. Let's put this right by the tennis court, right in this corner. I think this area has a lot of room to grow, so this might appreciate a lot faster. And hey, look, almost maxed green sports because of this. There's just no facilities or convenience yet, but I think that's going to change. So our rent might start a little low. And we are in a contraction. Okay, this is the first time I really actually seen a contraction. Inflation's still pretty high, though. Unemployment's 5%, yeah. All right. We're going to see, then, if there's any moves we can make now. ICBC. Very volatile. That's what I've noticed. I mean, if you remember, we bought all the way down here. And there's a plague. Have not seen this event before. Green Evers. I don't know how much that'll affect us. We're not really in farming. It might affect values a little bit. But we should be okay. Real estate's fairly recession-proof. Well, I don't want to say recession-proof. But at least the rents we're collecting should be mostly recession-proof. I don't really know if we're going to take a big hit from this contraction. I wish I'd get back into ICBC. They're making so much money. I just don't want to pay a premium from any of these other companies. They're just going to try to scalp me. CVC. This could be a gamble, and the public actually owns some of it, so let's purchase 5%. All right, that'll be nice. We'll let that ride for a little bit. Oh, there's a nice stadium. Oh. You know, right in this corner here, by the stadium. There's a store here. Maybe on this corner, or one of these two corners. Let's put another one. It seems like we're kind of just spamming apartments, but I mean, I try to place these strategically. It's just, it seems pretty... Oh, we can't afford that, can we? Can we afford this one? Wow, that land's expensive. All right. No, we can't yet. That'll change pretty quickly. Wow, our operating... This is almost doubled. I mean, we just hit 20 and now we're at 37. And it's our... yeah. Our bank lifetime has lost 423 mil. That's unfortunate. That's almost half of our revenue generated in its last 28 years. Our bank's losing around 3.2 mil. We're bringing in around 10 mil a month, though. So, you know, we're turning into I would say, a real-life small-cap stock. Worth about $1 billion. Almost. Once you turn around our banking venture, I mean, that multiple could expand further. I might issue debt, just because I don't want to... I mean, we can... Oh, wow, 30... All right, cool. We like that. I could probably just wait this out. Yeah, I mean, our land assets are worth almost... I mean, geez, without our bank, we'd be... we've had over $1 billion in assets. That's too bad. Let's see if we can purchase a property now, and if we can, I'll probably just issue debt. Because I want to expand a little faster, especially because I see some really nice opportunity here in the city. Okay, luckily we can purchase. Right around, I'm going to say 14, 12. Right here's probably nice. Yep. Maxed out shopping. Good. And now we've surpassed 40 mil. This, I think, should continue to go exponentially higher. And then flatline once we stop expanding. But that leaves us with around 10 million in cash. And honestly, that might be a good stopping point. Another episode of really pure expansion, but I mean, this continues to recover a little faster than I expected. I'm waiting for... Oh, these are finally getting paid off too. Lovely. We like to see that. All right, that's good. Because these are ridiculous rates that we're paying, especially when our savings account's paying 2%. But okay, this is really nice. This is good to see. Our bank might very well be recovered by next episode. So we spent about 2 episodes recovering our real estate. Got us to around 42 million operating profit. A lot of room to work with here. And then we can finally take some steps to try to become a little more competitive, especially against some of these other players. I think we could take some market share from them. We could offer some very superior service. Branding, I think, is going to be the most difficult. But also, with the cash balance that we have, I think we could plop a media firm. They're a lot of money, but I think it could be worth it. So we could basically use the media firm to market our bank, market our enterprises, but also others. So I think that's where we're going to head in the future. We're going to look to open a media firm to help with our brand. We're going to start opening branches again and take this a lot slower so we know what we're doing and what we're paying. Hopefully this recovers to zero. Once we see it recover to really flat, then we're going to start opening other branches. But our real estate empire looks solidified right now. I hope you all enjoyed the episode, and I will see you next time.